Something extraordinary happened in October that sent 10 stocks absolutely skyrocketing as much as 400% on pure speculation. But while the headlines moved on and the mainstream financial media chased the next shiny object, these stocks quietly pulled back and have been consolidating for months. Now might be your absolute last chance to position yourself before rumors of government investment become official policy. And that policy transforms into actual deals that could send these names significantly higher. I'm going to walk you through the 4 critical sectors the Trump administration is targeting. How tens of billions of dollars in grants are being converted into equity investments. And the 10 companies that represent the administration's strategic playbook for reshaping American industry. Here's exactly what makes this opportunity so explosive. Understand that the force behind this movement represents a fundamental shift in how Washington operates. This content is for educational and informational purposes only and should not be considered financial advice, it's investment advice, or a recommendation to buy or sell any securities. We've moved from traditional government subsidies, grants, and tax credits, which is essentially free money to grow specific parts of the economy, to direct equity stakes in the companies themselves. For investors, that's where things shift from merely interesting to potentially life-changing. Just think about the scale we're discussing here. The CHIPS Act alone provided $52 billion in funding to boost U.S. semiconductor technology and manufacturing capabilities, then add tens of billions more from other programs, including the $6 billion already earmarked specifically for critical minerals development. Now zoom in on the opportunity. You're fundamentally rewriting the entire investment thesis and potentially creating generational wealth for early investors. It's precisely why these stocks spiked so dramatically on the rumors back in October. But with investors constantly chasing every new trend and shiny object, these 10 stocks have been largely forgotten, sold off, and are now offering what could be one last window to buy before the deals are finalized. Because when the actual agreements are announced and formalized investment by the U.S. government becomes reality, it's going to take these names significantly higher on a sustained basis. The biggest impact, and 6 of the 10 stocks I'll show you, is concentrated in rare earth elements and critical minerals. This represents a national security bottleneck that affects absolutely everything from artificial intelligence systems to hypersonic missiles, next-generation fighter jets, electric vehicle batteries, and the smartphones we all carry. The profit margins just aren't there for private companies to target that production without government support. It's how China, through aggressive state-sponsored programs over the past 3 decades, has systematically cornered the market, now controlling almost 60% of global mining and more than 90% of the processing for these critical metals. That's 90% of the supply of materials essential to national defense and advanced technology that could theoretically be shut off at any time. And that existential threat is exactly why the government has already announced more than $6 billion in grants for domestic mining, processing, and refining capabilities. And why those grants are now being converted into direct equity investments rather than just subsidies. Before we dive into the specific stocks, though, let me be completely transparent about something critical. This video is for educational purposes only. I am not a financial advisor, and nothing I say should be considered financial advice. You must do your own research and due diligence before making any investment decisions. Stock market, and especially small-cap stocks like many we're discussing today, involve substantial risk and you could lose money, potentially all of your investment. Always consult with a qualified financial professional who understands your specific financial situation before investing. With that essential disclaimer out of the way, let's get into these 10 stocks. First up, we have Trilogy Metals, ticker TMQ, which absolutely exploded 409% in October on news of proposed government investment. This surge was driven by speculation around the Upper Kobach Mineral Project in Alaska, which sits in a mineral-rich area containing copper, zinc, lead, and other rare earth minerals critical to national defense. The Trump administration ordered an access road to be built into this Ambler mining district. It's essentially paying for infrastructure and development access. Under the finalized deal announced in October, the government invested approximately $35.6 million for project development in exchange for a 10% equity stake in Trilogy, plus warrants to purchase an additional 7.5%. The Department of War also provided $17.8 million to purchase shares directly at $2.17 each. I'm going to walk through all these rare earth element stocks and explain why the government is so interested in them, but you absolutely need to do your own research here. We're going to examine the fundamental analysis, look at earnings and revenue estimates, and you'll see a consistent pattern across these names. It's very tiny companies, market caps ranging from under $1 billion to maybe $2 billion. With no revenue as of yet, and operating deep in the red as far as earnings and cash flow, looking at Trilogy's cash flow statement, you can see operating cash flow negative $2.6 million over the trailing 12 months. That's going to accelerate significantly as the company develops these resources and ramps up operations. But it does have that critical backing from the US government now, with the government literally paying for development of these mines and resources. That government support does help de-risk these shares to some degree. But understand there is still enormous risk in these investments. These are essentially do or die, all-or-nothing stocks where the outcome depends entirely on successful project execution and continued government support. We also have Critical Metals Corporation, a company with just a $963 million market cap. It's really a penny stock that jumped 414% in October. This surge came on news the government was extremely interested in the company's Tanbreeze rare earths project located in Greenland. This is actually part of the reasoning why President Trump discussed the United States potentially purchasing Greenland, because of the island's extraordinary strength in rare earth deposits. It's under the proposed deal structure, the U.S. would acquire approximately 8% of this company. Now I'm going to reveal 4 more of these rare earth stocks and for others the government is targeting across different sectors. But understand again that for most of these stocks, this represents an all-or-nothing investment thesis. If a government ownership deal is signed and formalized, that stock price is going to surge dramatically. But if nothing materializes or deals fall through, you definitely want to limit your downside risk. Which is why understanding position sizing and risk management is absolutely critical with these speculative plays. Next, we have Lithium Americas, ticker LAC, one of the relatively larger companies in this space at approximately $1.5 billion market cap, which surged 242% in October. The massive move came on interest from the government in the Thacker Pass mine located in Nevada. Under the deal announced in October, the U.S. Energy Department acquired a 5% equity stake in the parent company shares, plus an additional 5% stake in the Thacker Pass lithium mine itself, which is being developed as a joint venture with General Motors. Lithium represents a critical linchpin for building domestic battery supplies, as the metal is essential for batteries in electric vehicles and other electronics. It's a critical mineral that we simply do not mine in sufficient quantities here in the United States, making us dangerously dependent on foreign sources. You've also got MP Materials, ticker MP, which is one of the few stocks that has actually held most of its gains from the October surge, reaching as high as $100 per share. It's by far the largest of the rare earth stocks with a $9.4 billion market cap, making it a giant compared to some of these others. It actually has genuinely strong fundamentals that make it significantly less risky than many competitors in this space. This company operates around the Mountain Pass mine in California, and they're the furthest along in negotiations and formal agreements with the government. The U.S. Department of War acquired a 15% stake in the Mountain Pass rare earth mine, making the Pentagon the largest shareholder in MP Materials. Under the unprecedented deal structure announced in July, the Pentagon invested $400 million for its equity stake and established a price floor of $110 per kilogram for neodymium praseodymium oxide, a key magnetic material. The government pays MP the difference when market prices fall below $110, but in return captures 30% of the upside when prices exceed that floor. If you look through the fundamental metrics of this company, you can see it's substantially less risky than the others we've discussed. MP Materials is already generating revenue, with $275 million expected this year, representing 35% growth from last year. Next year, analysts project revenues reaching $615 million, which would be 124% growth. Absolutely amazing for a mining company. The company is still operating at a loss currently with negative 28 cents per share expected this year, but is actually projected to turn profitable next year with 74 cents per share in earnings. That's very strong fundamental improvement and represents significantly less risk than the pre-revenue stocks trading purely on speculation. Next, we have USA Rare Earth, ticker USAR, another relatively larger company at a $2 billion market cap, though $2 billion is still quite small in the grand scheme. This stock surged 141% in October as these government interest rumors started circulating. The company is making aggressive moves to challenge China's dominance through a transformative $100 million acquisition of UK-based LCM, which brings 30 years of proven operating experience. USA Rare Earth CEO Barbara Humpton told CNBC the company was in close discussions with the White House about potential deals. The company operates a mine development in Sierra Blanca, Texas, and a neodymium magnet manufacturing facility in Stillwater, Oklahoma, expected to achieve commercial production in the first half of 2026. Another company that just made headlines is Niocorp Developments, ticker NB, which has received significant attention from the Defense Department. Niocorp is advancing its fully permitted Elk Creek project in Nebraska, which aims to become America's first domestic source for multiple critical minerals currently imported almost entirely from foreign sources. The project boasts compelling economics with $403 million in projected annual EBITDA over a 38-year mine life. The company received a $10 million Department of Defense grant supporting reserve drilling to upgrade probable reserves to proven status, substantially reducing project risk. Niocorp raised over $212 million in 2025 while maintaining a zero-debt balance sheet. CEO Mark Smith reports that critical strategic minerals are now the absolute top priority across the White House, Congress, and federal agencies. Beyond rare earths, the Trump administration is also laser-focused on semiconductor manufacturing for obvious national security reasons. While NVIDIA and AMD are American companies that design these critical chips that function as the neurons of the modern tech economy, most investors don't realize they only design them and then pay someone else, almost exclusively Taiwan Semiconductor, to actually manufacture them. TSMC manufactures more than 60% of the global semiconductor supply and upwards of 90% of the highest performance AI chips. You can immediately see that's an enormous problem considering the island of Taiwan sits just 100 miles off the coast of China. And the Chinese Communist Party has maintained a singular long-term goal to take control over Taiwan. That means the most critical component of any electronic device. Every AI system, all defense platforms, and literally every computer could be instantly crippled without access to those chips from Taiwan. The biggest news in semiconductors was the government acquiring a 10% equity stake in Intel, ticker INTC, valued at approximately $9 billion. Intel had originally been set to receive $11 billion in CHIPS Act grants. But instead, the government converted that into direct equity ownership worth $8.9 billion at the time of investment. This move significantly strengthens U.S. supply chain resilience and chip security if Intel can successfully expand its advanced manufacturing capabilities domestically. You can see these shares are up 77% year-to-date on the rebound in government support. Against that upside potential, though, I should point out that Intel is actually my least favorite of the major semiconductor stocks. The manufacturing segment might receive a boost from government support, but Intel remains way behind competitors on chip design and is the only major semiconductor company still posting operational losses. Revenue growth is expected at just 1% annualized this year and next. And there frankly isn't much beyond hope driving the investment thesis right now. Flying completely under the radar in all of this is the potential for steel stocks and companies in that traditional manufacturing industry. President Trump has literally bet his entire legacy on returning manufacturing capabilities to America, with shipbuilding representing a particular focus. All of which will require absolutely massive amounts of domestic steel production. That means control over steel production isn't just economic nostalgia. It's become a legitimate national security issue and represents the ability to build military assets at scale when it matters most. That's why the U.S. demanded a so-called golden share in U.S. steel to approve the acquisition of the American steelmaker by Japan's Nippon Steel earlier this year. It's not technically a direct equity investment in the company, but it does give the government veto power over major strategic decisions going forward. There isn't a specific single steel stock I'm highlighting here, but this government support tailwind could mean continued strong returns for the Vanks Steel ETF, ticker SLX, which is already up 45% this year. This ETF holds 46 companies involved in mining and processing steel, giving you diversified exposure. You've got major U.S. producers like Cleveland-Cliffs, alongside international companies you might not have access to otherwise. Approximately 51% of net assets are invested in United States-based companies. This next sector is just starting to hear serious rumors and could be about to experience a major pop in stock prices. Commerce Secretary Howard Lutnick told CNBC in August that there has been, quote, monstrous discussion around defense contractors and these kinds of strategic equity investments. Most defense spending traditionally flows through procurement contracts rather than direct subsidies or equity stakes. But just the sheer size of that spending, over $900 billion in fiscal 2026 alone, is absolutely staggering and represents enormous potential. Secretary Lutnick stated in that CNBC interview that Lockheed Martin, ticker LMT, is, quote, basically an arm of the U.S. government already. I'm not entirely sure all the shareholders would agree with that characterization, but it does make the company target number one for potential government equity investment as the world's largest defense contractor. The stock is actually down 3% this year, so it's obviously not getting any boost yet from this rumored support by the government, which means it could be about to pop significantly if those deals come through. Lockheed produces some of the most critical military platforms, including the F-35 fighter jets, advanced missile defense systems, and sophisticated radar technologies. I think shares of RTX Corporation, ticker RTX, which is the company formerly known as Raytheon, fits perfectly here as well with its Patriot missile defense system and critical surface-to-air missile capabilities. Considering the direction modern warfare is heading with the increasing importance of air and missile defense, a U.S. equity stake would help secure supply chains and ensure sustained production capacity for missiles and integrated air defense systems. However, it's worth noting that Boeing's defense unit CEO Steve Parker said in December that equity stakes really only apply to smaller companies in the supply chain, not to major prime contractors like Boeing, Lockheed, RTX, and Northrop Grumman. Parker suggested these large legacy contractors are expected to invest in facilities themselves without government equity assistance. So let me wrap this all up and give you the complete picture. Each of these 10 investments represents the Trump administration's strategic playbook for rebuilding American industrial and technological dominance while reducing dangerous dependencies on China and other foreign sources for critical materials and capabilities. The rare earth stocks, Trilogy Metals, Critical Metals, Lithium Americas, MP Materials, USA Rare Earth, and NioCorp all represent high-risk, high-reward plays on the administration's push to secure domestic critical minerals supply chains. Intel represents the semiconductor manufacturing angle, though with significant execution risk. The steel sector through the VANX ETF offers diversified exposure to the manufacturing renaissance. And defense contractors like Lockheed Martin and RTX could see government stakes. Though recent comments suggest this may be less likely for the major primes than originally speculated. The key insight here is that this represents a fundamental shift in American industrial policy. Moving from passive subsidies and tax incentives to active government ownership and strategic capitalism. For investors, this creates opportunities, but also requires careful risk management given the speculative nature of many of these plays and their dependence on government action. If you found this analysis valuable, make sure you hit that subscribe button and turn on notifications so you never miss our coverage of these government investment opportunities. Drop a comment below and let me know which of these three main sectors, rare earths, semiconductors, or defense, do you think will receive the most attention over the next year, and which specific stocks are you buying? I read every comment and genuinely want to hear your perspectives. Thanks for watching, and remember to always do your own research before making any investment decisions.